Hello, trader friends. Today we're going to talk about a very important subject, the mental side of trading, and why the mental side of trading is so important. As you know, trading is done by clicking buttons. So every time you click on a button, your brain is telling your finger what to click, how to click, where to click, and why to click. And that is the reason why we have to work on our mental abilities as well as our technical, fundamental, and trading abilities in order to make money. So stay tuned because I'm going to give you some amazing tips of how to improve your mental trading. This past week, I was at an investing conference. And in this investing conference, something very interesting happened. Of course, they had all the famous hedge fund managers, they have all the famous economists speak, but they had one very smart dude, Dr. Gio Valiente. Dr. Gio Valiente, as all you golfers know, is one of the most famous, most accomplished sports psychologists in the world. And now, recently, he has been helping a lot of famous hedge fund managers and traders improve their trading. And one of the first things Dr. Gio said is that golfers are very similar to traders. You see, golfers need five things to succeed, and he said that traders need five things to succeed. The number one thing you need to succeed in golf and in trading is talent. Some people are just born with talent. For example, if we talk about golf, Rory McIlroy is just a natural talent. His swing is just flows incredible. His rhythm, you can tell that is natural, God-given talent. On the other side of the spectrum, you have people like Vijay Singh, also an amazing golfer, an amazing player, but he works his butt off. And that takes us to the second part of being successful as a trader or as a golfer. First of all, talent. Either you have God given talent or you don't. And if you don't have talent, the second thing you have to do in order to be successful is to work hard. And how do you work hard if you're a trader? Well, the first thing you have to learn as a trader are, of course, all the fundamentals of trading, all the strategies, all the little nuances like high volatility, low volatility, uh, implied volatility rank, which strategy is correct for a trending market, for a crashing market, for a neutral market, etc. So working hard in golf is hitting a lot of golf balls. Working hard in trading is number one, learning all the strategies. Number two, learning how to make assumptions. You can make assumptions based on fundamentals, on technicals, and based on in volatility. I make assumptions based on implied volatility. If it's high, I like to sell. If it's low, I like to trend follow, etc. So working hard in golf and working hard in trading are the first two important things in order to be successful. The third thing that you need in order to be a successful trader and a successful golfer is differentiation. Now, what is differentiation? Differentiation is looking at things differently. I can look at a chart and you can look at a chart, and we both may come up with a different view, with a different trade, with a different solution. So most people out there are just following the crowd, following the latest guru on YouTube. That's not going to make you money. What's going to make you money is having your own style, being different, and that differentiation is the key to be a successful trader. The fourth factor you need to be successful at trading or be a successful trader is process. What is your process every morning? You wake up at 4:30, you go for a walk, you exercise, you walk your dog, then you come back, then you check the S&P futures, then you look at volatility, then you look at your positions, see which ones that they need to be adjusted, which ones need to be taken off. Look for opportunities. Do you have a watch list that you go through one by one? Do you look at the charts of the indices? Do you look at what's volatility doing that day? Do you read any information that may skew your brain? Because we're always reading stuff that we all want to read stuff that matches our assumptions. Sometimes it's good to read stuff that goes against your brain. So, what is your process every morning? What is the process you go through every single day that allows your brain to make a decision if you're going to put on a trade or you're going to put off a trade? Now, if you're constantly losing money trading, that means there may be something wrong with either your talent, the knowledge, you didn't work hard enough to acquire that knowledge. Maybe you're looking at things like everybody else, there's no differentiation, or maybe your process is not correct. Maybe you're looking at the wrong things to make decisions. So maybe instead of blaming yourself for a bad trade or for bad results during a specific period of time, maybe you have to look at the process. Maybe your process is the one that's wrong and you need to improve your process. How do you improve your process? Well, you follow and you understand how the best traders in the world do it. For example, Uncle Tony, the first thing he does in the morning is look at the futures. After looking at and what futures do I look at? I look at the indices, the S&P 500, the Nasdaq, the Russell, the Dow. Then I look at volatility. Is volatility rising or volatility crashing? Then I look at indicators like gold, bonds, Bitcoin, copper, wheat. I like to see what's going on. Then I look at the currencies. I look at the euro, the British pound, the yen. The yen is very important this year. You have to be looking at the yen this year because the yen has devalued like crazy, and the Bank of Japan is worried. So that's an important part of my process that I look at every day. Then I also look at the new stocks, the stocks that everybody follows, like Apple, Google, Microsoft, Tesla, and see what they're doing. Then I try to see what's the disaster of the day. Was it a good earnings report by Tesla? Was it a bad earnings report by Starbucks? A terrible report by McDonald's? And try to come up with some assumptions for the day. After that, I go outside, clear my mind. I like to walk my dog after I look at the futures, look at my positions. Why? Because I want some quiet time and let my brain, work and do its thing to plan what I'm going to do when I go back from my walk. I try to get back from my walk right before the market opens. And when the bell rings, ding, ding, I already have a written plan of what I want to do, what things I need to adjust, what trades I want to put on, what things are weird, what things I need to be watching. And then I execute on that plan. So, working on your process is one of the most important things that you can do to improve your trading. And the fifth thing that golfers and traders do in order to be successful is they hire. Now, who do golfers hire? Well, golfers hire a trainer, a chef, a personal assistant, a sports agent, a sports psychologist, a trainer. Why? Because these are talents that they don't have and they hire them away. Maybe as a trader, you hire someone else to help you give you assumptions. Maybe you hire someone to give you technical information. Maybe you hire out someone who identifies trades. Who knows? As you know, trading is a very, very lonely business, and having a team around you and hiring some special little nuggets here and there can make your process complete in order for you to be a successful trader. Dr. Gio also said something very, very interesting, that his main job is to get fired. So what? Don't you want the money, Dr. Gio? No, he said his main job is to help people improve their brains and let them go, let them do their thing. So when he achieves his goals, he wants to get fired so he can go out and help someone else. And that's what Uncle Tony actually wants to do with you. I want to help you get better. I want you to help you improve your process and make money on your own. And of course, if you want to keep watching my videos, that would be great. So here are 6 stages that Dr. Gio said that people need to do in order to be a successful trader and a successful golfer. Number one is knowledge. So, what is knowledge? Knowledge is knowing what the hell you're doing. From turning on the computer, that understanding how to use the trading platform that you're using, how to understand each and every single strategy that there is, selling puts, selling calls, selling verticals, selling ratio spreads, selling butterflies, buying butterflies, etc. You need that knowledge. Without knowledge, there's nothing. So the first thing you have to do is have a complete knowledge of all the intricacies of trading. Number two is comprehension. After you learn everything, and you don't have to go back to your little notebook and say, what is a short call vertical? What is a long call vertical? What is a butterfly? When you comprehend, that is the second stage. You acquire knowledge, then you comprehend it. When I look at volatility, I don't have to start thinking, oh, volatility is high. What does that mean? What strategy that is good for high volatility? No, I already know. So after knowledge, you have comprehension. Then you have application. What that knowledge that you acquired, that that you comprehend, how do you apply it? How do you execute? How do you apply that knowledge? How do you apply all those ideas that are coming to your brain, ding, 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 and how do you apply it into your process and your trading? Then comes analysis. You have to be able to analyze something that you are going to execute or that you have executed. And some people look at trades individually. I like to look at things holistically. And what does holistically means? It's a fancy word. I just learned it. Holistically means is how this new element is going to interact with my current portfolio. Sometimes people say, "Hey, Tony, why are you doing this trade? That's a bad trade." You guys don't know what I have on. You do not know Uncle Tony's book. If you had my book, you would know what positions I have and why I'm analyzing this new opportunity, how it fits into my portfolio. Then we synthesize it, or whatever that means. To synthesize something is to create a thesis. You have to have a thesis. What is my thesis right now? My thesis is that interest rates are going to stay higher for longer. What does that mean? It means that companies are going to have margin pressure. It also means that I can put some money into treasuries and have a nice secured income for my cash portion of my portfolio. I also have a thesis that we're not going to go up to the sky. So that synthesis of everything that I know, understand my process and my portfolio, I can synthesize this. And then lastly, we make number 6 a judgment. I judge my book. How do I judge my performance? All traders judge their performance by their P&L. Sometimes you did everything right. Sometimes you analyzed everything perfectly. You followed your process perfectly and you lose. That's called math. Trading is trading. Trading is not called winning. So we're very hard to judge ourselves. Judgment, we have to judge ourselves both ways, with the winners and the losers. Why? Because if we just judge ourselves with the losers, then when we have a winner, we don't know why we won. Did we get lucky? Did I get lucky with this trade? No. So that's the process that we have to follow. Number 1, knowledge. Number 2, comprehension. Number 3, application. Number 4, analysis. Number 5, synthesis. Number 6, judgment. Now we have the basis to improve our mind, to have a process on how to become a great trader. After that, this genius of a man, Dr. Gio Valiente, gave us 2 very important subjects. two subjects that are crucial in order to win at trading, of course, win at golf too. And those two concepts are confidence and motivation. You see, our brain is wired that our feelings are based on the last thing that happened to us. So if the last thing that happened to us was a successful trade, we're overconfident. If the last thing that happened to us was a shitty trade, we put on an earnings trade and we lost a lot of money, then our confidence is down the tubes. Confidence is something that allows us to take our skill. And what is our skill? Everything we talked about before, our knowledge, our application, our judgment, our synthesis, our analysis, and everything, and elevate that skill. All of you watching this video are talented human beings, and you need confidence in order to elevate that skill. Now, what is the perfect? People were asking Dr. Gio, so should I be overconfident? No, let's say confidence is this level. You have to be a little bit overconfident, because if you're super overconfident, then you become an idiot. You start doing crap, and then you're just winging it. So confidence is very important, but just a little bit of overconfidence, a little bit of overconfidence that you know what you're doing, that your process is correct, that you have the knowledge, that you have the skills, will elevate your trading just a little bit more. If you lack confidence, you're going to be scared to click the button. You're going to be scared to maybe put on a trade that's a perfect time. So don't let the last bad thing that happened to you ruin your confidence. As long as you have the knowledge, the process, and everything correct, bad things are going to happen because it's math. Trading is not 100%. Don't let some bad trade affect your confidence. And of course, trust on your skills, trust on your knowledge, and execute it. And never, never lose on that confidence. If you lose that confidence, you see, something terrible happens. Uh, Underconfidence will make you risk averse, will make you not want to take risk, will make you make bad decisions, maybe take a trade off too fast that you should have waited a little bit longer. Maybe it'll forces you to add to a loser, something you should never do. So if you lose confidence, it undermines your skill and your knowledge. When that is happening, try to clear your mind and think of yourself. Hey, I have the skills, I have the knowledge, I have the experience, I know what I'm doing. This stupid bad trade is not going to take that confidence away from me. This beautiful thing that we love trading is actually designed to undermine your confidence. This trading is a hack. Trading undermines your confidence. And when confidence gets undermined, we become risk averse. We have the yips, if you can call it that. We don't want to click the button. We lost our confidence, and trading does that for you. And of course, people, as time goes by, they allow fear to take over. They allow fear to take over and not let them execute correctly, not allow them to take risk, and and also, our brain is designed to remember pain more than rewards. So if you're feeling pain right now with a bad trade, just tell yourself, "Hey, this is my brain telling me something." But if maybe it's telling me that I need to improve my knowledge. Maybe I need to improve my process. Maybe I need to improve my analysis. Maybe I need to improve my judgment. See, use that pain that you're feeling right now in order to improve and get better. And then gain that confidence back that you know what you're doing and you can execute. Another concept that I learned during this amazing presentation is motivation. Motivation is what gives you the energy, the to go and wake up early, to look at your process, the motivation to learn more, to learn from other people, to look at things differently, to differentiate yourself, to analyze better, to synthesize better. And of course, when we're young, we're full of confidence. And trading again is designed to undermine your motivation and your confidence. And you need to stay motivated. You need to stay motivated in order to be successful, because trading is a hard job. It requires a lot of learning, a lot of analysis, a lot of synthesis, and without motivation you won't be able to do it. Some other people, some other people make so much money that they lose that motivation. We can see it sometimes in athletes that sign a huge contract. They're not as motivated anymore. Maybe they don't do that. They don't train as hard as they used to in order to be successful. So don't let success, financial success in life, take away that motivation. You see, everything around us is wanting us to be comfortable. Don't let success take away your confidence or your motivation. We have to protect confidence and motivations at all costs, because those two triggers, those two batteries that we have inside our brains, are the ones that we actually need in order to be a successful trader. Without confidence, without motivation, it's going to be very, very hard to be a successful trader. Now, I want to talk about stress and anxiety. We all can feel stress. Stress is something that is, lingering inside of us, something that's making us uncomfortable. And anxiety is something deeper. Anxiety is something that is not letting us sleep. It's something that we're constantly on our brain, that is not allowing you to enjoy time with your family, enjoy time with your friends. You're always thinking about something. And if you're feeling anxiety while trading, maybe it could be some reason. And the number one reason I find people have anxiety is because they traded too big. If you already have the knowledge, you have the skills, uh, anxiety comes from trading too big and having a position go against you. Why? Because I've been there. Not once, not twice, three times, four times, five times, many, many times. Of course, we're all stressed while we're trading. Stress is not bad. Stress sometimes helps you focus more. But if you reach the level of an anxiety, that means there's something wrong. And that what you should do immediately, which it's easier said than done, is maybe cut that position in half or take 70% off, and that will reduce anxiety completely, because this what's making you anxious are those huge losses on very small moves in the stock market. If a small move is changing your P&L a lot and causing you anxiety, you know what to do to fix it. Of course, we're all trying to predict the future, right? How do we try to predict the future? We look at volatility, we look at technicals, we look at fundamentals, and we try to predict, well, where that stock is going to be. And, you know, Dr. Gio said also something very interesting. 80% of the stress comes from worrying about things that probably will never happen. Another trader genius, Doug Cass, says something all the time that I really like. He says that catastrophes tend not to happen. Of course, catastrophes can happen some other time, like COVID or the crash of '87 or the 2008 great financial crisis or the dot-com bust, etc. And those things do happen. But some of the stress that we feel every day, that the stress can turn into us anxiety, is trying to predict the future and always looking at the worst case scenario. I'm a victim of that. I'm always Dr. Doom. I'm trying to say, oh my God, what happens if we go down 20%? I'm going to get a margin call. I'm going to get this. They're going to call me from Tasty Trade. Hey, Tony, we need more moolah for margin call. So we're always worried about worst case scenarios. So one way to reduce stress, like I said, is trading smaller, having a diversified portfolio, but not by underlying, having some longs, having some shorts, having some large premium trades, having some protective trades. And of course, none of us can predict the future. So one way to reduce stress is to not worry about the worst case scenario and not worry about the future. If trust your process, and if you execute it correctly, most of the time, the majority of the time, things are going to work out. Lastly, in order to be a successful trader, you need something called persistence. Of course, persistence, we need to be persistent and stubborn. We need to be stubborn. Why? Because trading is really hard. The market hits you, punishes you all the time. It gets you, it hurts you with losing trades, it goes against you. So, in order to be successful, you need to be persistent. Hey, trust me, I've thought about quitting a million times trading, but I knew that I saw a lot of very successful people, and I said, Jesus, I've always had confidence in myself. I think, geez, I'm as intelligent or more intelligent than these guys, and these guys are successful. Maybe I should stick with it. And how do you stick with it? You improve your skills, you improve your process, you improve your analysis, you improve your judgment, you improve your decision making. Uh, you have to improve your analysis, everything. So sometimes success is just around the corner, because when you're trading, you're very excited. The excitement and the motivation is high. Then, of course, you lose money, and shit, the market punishes you, and then you lose that motivation, you lose that confidence, and a lot of people quit there. In order to have the motivation to keep learning, you need persistence. You need persistence to keep going. You need persistence to improve your process. You need persistence. You have to be stubborn and keep learning and keep at it. And sooner or later, that persistence will, and that correct process will give you winning trades. Those winning trades will create confidence, and confidence will make you a successful. And lastly, I want to talk about IQ. IQ is a measurement of your intelligence. Who the hell knows what IQ is? I've always thought of myself as a high IQ person. Yeah, I'm overconfident. I'm maybe a little arrogant. Yes, but I've always thought of myself as a high IQ guy. I always scored straight A's in school. Had great grades. I was able to grasp mathematical concepts easily. So I always thought I was a high IQ person. And I thought, geez, trading is easy. So I started trading, and I lost a shitload of money. Even my dad, who's no longer with us, was telling, what the hell are you doing, Tony? Are you an idiot? And I said, why? Because I thought that my IQ, I thought that just being intelligent was going to make me a successful trader. And like we saw in this video, there are many, many things that you need in order to be a successful trader. What true intelligence is changing fast. If you're doing something and it's not working and you're getting your ass whipped, the intelligent people, what they do is they change. How do you change? You acquire more skills, you acquire more knowledge, you improve your decision maker. So the most intelligent people in trading, the highest IQ people, are the people that are the fastest to change, to adapt to a new volatility regime, to adapt to a new market, to learn more skills, to learn more trades, to get more tools, to get better people around you. So if you really think you're a high IQ person, ask yourself, are you making the same mistakes over and over and over again? Maybe if you want to improve your IQ in trading, you have to change fast. You have to stop doing stupid things. And then you can become a smart trader. So there you have it, trader friends. Trading, once you have the skills, once you have the knowledge, it's all here. Why? Because this is the thing that makes our little finger go and click on the buttons. So in order to be a successful trader, you have to have a correct mind, a clear mind, a mind that has confidence, a mind that has skills, a mind that has knowledge, a mind that can analyze, a mind that can make decisions, that can judge, that can change, especially a mind that can change and get better. And I hope everybody out there changes, improves their skills, starts making a lot of money, and be kind to Uncle Tony. Share, subscribe if you like this video. If you don't like it, that's fine too. I love you. Thank you for supporting my channel. And remember, you gotta risk it to get the biscuit, baby.